Hey traders, today's a little surprising, especially after ABIL yesterday. I was really thinking that some momentum was going to carry through today, but very slow day. There was maybe one pump in the morning, and that was it. So I don't want to waste your time. I want to go over a few patterns for you today and go over a bear flag, which we actually saw today on KBSF. I'm going to show you how to spot the bear flag and bull flag. That way you can see it before it happens. So I just typed in Google bear flag, bull flag. Let's look at some of these. The bull flag is in an uptrend. What's tricky about the bull flag is it looks like it's descending. So you have lower highs and you have lower lows. When I first started trading, I didn't really like the bull flag because I couldn't really tell, I couldn't predict like where to get into it because it just looked like it was going down. So how do you know where to get into it? Okay, this is an example of a bull flag. We have the volume surge at the start of the day. We have good volume, 400,000 shares traded. And then if you look at the volume, you'll see it starts fading off. And that's a good sign, that's not bad. But during the fading of the volume, we want consolidation. So we want this bull flag to squeeze together. It's almost like a pennant as well. This is kind of like a symmetrical triangle. I prefer this actually because it's squeezing together. You have lower highs and higher lows. So you're getting squeezed together, and what your eyes want to be focused on is the volume. Preferably you want more volume than the start of the day, but you at least want something equivalent to that. So if you look at the volume, it goes down and then break up. And that's what you want to see. So your eyes want to be on this level 2. You want the bids to start stacking. You want the times and sales to just start flying, and you want the volume to start surging. And that's a good indicator. Okay, this is about to break out. Let's get in. Now at 625 here, we have one upper shadow, and now we're forming two upper shadows. So this would be a place to sell, because we're starting to see volume start getting a little lighter. If you look at the volume now, it's not even at 100,000 shares. It's a lot lighter. When you see upper shadows and light volume and bids not stacking, that's an indicator, okay, lock it in, take profits, at least scale out some, lock in some, and then maybe it'll come back down, bounce off 575, and U-shape back around. Now I want to show you guys the bear flag we see at the start of the day. It's in a downtrend. And a lot of times with bear flag, what happens is, I notice this a lot at the start, we'll have panic selling. We'll have a huge sell-off, and then shorts will start covering their position, and then we'll get some type of a bounce. And then what you start seeing, and this is tricky, is an uptrend. So a lot of amateurs are going to start thinking, okay, this is getting some strength. It's in an uptrend now. We might U-shape back around and break up through the high day. But no, it is a bull trap for amateurs. They're luring you in. It's not moving upward. I mean, it is moving upward, but it's just trying to trap in some more bulls for another breakdown. The bear flag in a downtrend. So we have the initial panic sell, huge sell-off. Then we start covering our position some. The shorts start covering. We start in an uptrend. We have higher lows and higher highs. And what you want to look for on this, again, is volume. You want to be looking at the volume because just like on KBSF this morning, we have the sell-off here. Then we start forming some higher lows and higher highs right here. And then if you notice down here, we have about 125,000 shares of red volume come in. So a huge volume spike after this faded off, because the minutes prior to that we were looking at like 20,000 shares, 30,000 shares, and then 125,000 shares comes in. That's what you want to be looking for. Draw your trend lines, guys. Pay attention to the times of sales. Notice how fast these orders are going through. Notice what the ask is looking like around here. So if you're short selling, you would want to see the ask start thinning out, narrowing down to the bid. So the bids and the ask getting closer and closer together. And also if you start seeing large quantities on the ask, so right around these levels at 630, if you start seeing like 10, 20, 30, 40,000 shares at 630 on the ask, that's a sign that it's probably going to crack. Because for one, buyers are not going to be buying at 630, and also shorts are going to be market ordering in, so they're going to be hitting the bid, slamming it, and so these 630 orders are probably not even going to get taken out. And then we have the next sell-off. Really, the key three things you need to be looking at are times and sales, level 2, and volume. And that's going to help you just figure out, is the bull flag going to happen? Is the bear flag going to happen? I think it'll make you a successful trader as far as trading these patterns are concerned. If you haven't yet, watch my video that's called Know This Before You Start Trading with Thinkorswim. A few people have already commented and said they've been trading on delayed time and haven't even known it. It'll say real-time data up in the left corner, but they're delayed a few seconds, and that's going to hinder you guys. So go ahead and watch that video, and I look forward to seeing you tomorrow.